So technology has hit insurance, but it's also hit other industries. Today we're going to talk about how the top 5 companies are affecting the mortgage industry. If you're getting a home loan or you're getting insurance on your house, this is important for you to see as far as where the market is trending towards. Thank you to Bankrate for this article. This is very powerful and it was a fun read to have, where it talks about that the mortgage industry right now to get a mortgage or a home loan is on average about 50 days. That's a long time with all the technology that we've got and the ways that banks pay. I can take a picture of my check and it goes into my bank within a day to 2 days. Well, there's a lot of verification and there's companies that are trying to speed up this process. How do we make sure the tech can just instantly work where it's going to delay that down or bring back those days that you don't have to do all of those technical pieces? I can see it even in my own industry where I'm looking at different CRM softwares. They're called customer relationship management software, and they're really making it easy for us to communicate. It sends out an email for me, it sends a welcome letter, it sends out a text or anything that I need to clients and people that want to get that type of data. The downfall is you have to opt into all of that to get most of that information. With mortgages, that's easy. So this is going to be a simple process. However, it does say that there is a 7-day delay regardless that just needs to happen. That's just something that they want to make sure that time has passed. It's almost like a waiting period to make sure your food cools down and it's not going to burn you. Same with the banks and the mortgage lending companies. They want to make sure that they're going faster and they're allowing technology to help, but not too fast. We will maybe one day be in the matter of days instead of weeks and possibly months. The second piece of technology that is starting to come into the market is virtualization. When you're refinancing your house or you're doing some sort of a mortgage loan, they typically require that you have an inspection on the house. But a lot of houses have virtual pieces already built into them. So they're thinking that there should be a way that within 72 hours, either someone could visit the home or there can be a virtual tour that just shows the generalized home in itself. I can see that becoming a little bit of a problem because obviously you're going to hide something behind the water leak that they can't see or discolor it or degrade the video, whatever the case is, so that it's not going to show. But in most cases, people are pretty fair and honest and they're just looking to either refinance their house or sell it or whatever the case is. And somebody's viewed it. There's got to be disclosures that can happen. I can go after the guy afterwards if they don't disclose something like that. In those cases, that is slowing down part of the process. And if they can knock a few days out of that process for you to go virtual, that's more power in your hands being the buyer. Cash offers are the new breed of buying houses today because there are so many houses that are getting sold within a day. There's just not enough on the market. People are holding on to homes. I went with a friend and viewed some houses and the prices have gone way, way up. I feel like my house is double what I paid for it not even 5 years ago. So it's crazy how quickly they go. But how do you get the win? What these companies are doing, there's some tech companies or some mortgage or loan companies that are called iBuyer, and they're allowing you to purchase house with their cash. And they're loaning you, so you're paying more for this option, but it's getting you in the door, it's getting you a better deal, and sometimes a better rate on the insurance. Now, my mortgage friends, I have a lot of you. Please let me know in the comments below. There's got to be something that is even amazing about this or so wrong. There's something that just doesn't seem right that availability is an option. That might be a win-win where if I get a deal with a cash offer, maybe I pay an extra percent where they get a percent of that sale. Let's say $300,000 of a loan, they're going to get a $3,000 check. But what if it saves me $3,000 on my loan and it allows me to get the home that I wanted? That could be a win-win, but I'm sure there's some sort of caveats. Maybe it's a 5%. I don't know what the cost is. They don't mention it in the article. The fourth talk about it is the iBuyer, but it's also a setback because this was something Zillow was doing where they were buying up houses. It's a smart tactical move that failed. And what they were doing is they knew everything. They knew the market. They knew where the best houses were. They knew where the best locations were. They knew what was a growing community. So they were offering cash at a higher amount than most buyers could even pay. So they were buying houses above what they were supposed to go for in the thoughts of it's going to increase in value. Then they can turn around and sell them on the other side. It hurts their own clients because now their clientele is mortgage people or real estate agents trying to help sell and buy houses through Zillow. They're going to back off. Why would I send you to your platform when you're trying to steal my agent or my client and take up all these houses or markets that I'm supposed to get paid on? I'm going to build my own. I'm going to create my own. So a lot of that has broken up and shaken or something with the market where it's disrupted the Zillow world. I still go to Zillow because I like the pictures and that's cool, but I know that there's a lot of other indirect sites. Being in insurance, I know that sometimes a house was sold a year ago and it was exclusive to a company. Let's just say RE/MAX was the company that had an exclusive sale on a house. They might be the only one that has photos that I can see. So when you're looking on those sites and those different things, keep in mind, they've already started to implement their own portions to where you can't see a house on Zillow, but you can on the RE/MAX or whatever the company is. That's just an example. Zillow since has backed down on that because they ended up realizing that paying more for a house than they should is probably not the smartest idea. And they're still moving forward with parts of that. There's still some positive out of that whole thing, but ultimately it was just, according to the article, not a great move. Fifth tech trend that is coming out in 2022 is we're going to probably see blockchain. We're going to see Bitcoin and all of these things. I've seen people do it where they've transferred the funds through this, but what if a mortgage company let you buy a home through Bitcoin or through Ethereum or through Housing Market Coin, whatever the case is? That's going to be interesting to see. So as we adopt the blockchain and these different cryptocurrency pieces, how is that going to play a factor in the mortgage industry? It's a little bit out of my realm. I love and invest in a little bit of Bitcoin and those guys and some of the altcoins as they call them. But in general, as far as the mortgage industry, for someone that's in depth and sees it from day to day, I'd be curious to know what your thoughts are on that as well. So naturally, we all want to save as much money, and insurance is probably the best place to save the extra coin. If you're trying to get an additional down payment on a home, you need to get the best rates. I would check out our best way to get an insurance quote on your phone. That's going to give you some of those powerful tools and advice and those companies that are going to help you lower that cost debt to income and get the better deal where you're going to pay less out of pocket. Go ahead and check it out. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.